What's up, family? It's Smart Money Go, man. We are back with another video, weak highs and weak lows, strong highs, strong lows. Let's get straight into this, man. This is gonna be an amazing one. This is gonna be the beginning of some liquidity stuff, which is gold mine and smart money concepts. Liquidity is all over the market. So, man, we're gonna get straight into this presentation really quick, straight into the chart. Shouldn't be a long one, but the liquidity section will be a long one. This is just an introduction. And I hope you guys love it. Again, as always, like and subscribe, show some love, share, comment, let me know what I could do better. As always, let's get straight to it. So what determines a weak high and low? A weak high does not take out lows or structural points, right? Or demand levels. So if this high cannot take out a low, that's his job to do. The high's job is to go grab enough orders, take out a low, and then continue that trend. Or his job is to go, grab liquidity, take out a demand level or whatever like that. If it doesn't do that, then it becomes liquidity in the future, right? In the near future too. It could be if it's on a 4 hour, it could be a couple of days later. If it's on a 1 minute, it could be in 10 minutes. You know what I mean? So it all depends. Same thing with a weak low. It doesn't take out highs, structure points, so breaks your structure, that kind of stuff, or supply level. So if that weak low is not strong enough to go take out a demand level, a supply level, or a high, then that low is weak, and therefore in the near future will be deemed liquidity. Now for our strong highs, these highs need to go down and take out structural points or demand levels, right? So this shows a significant amount of intention from this level. And then when we're looking for from when we see these things happen, so from a strong level, we want to actually, because we see that intention from that level, it took out demand, it took out a low. We want to go when price comes back there, we want to look for sales. That's how we again our nice map out our point of interest, POI, and then we look for when price gets back to that level, we look for entry. And then for a strong low, protect the low, same thing. We want to take out it must take out structural highs or supply levels, which shows a significant amount of intention. And when price returns to that level, we want to look for buys from that area because we know a large amount of money entered from that area, and we know that's a strong level with significant intention. Now, why do we like strong, weak lows and highs, strong lows and highs? Uh, these allow us to trade from protected levels. So these strong highs and strong lows allow us to trade from protected levels, and then they are really, really easy to determine. It shows us who's in control because if a high goes and take out a low, right, then we know that supply is in control, and if a low goes and take out a high, then we know demand is in control. Easy, right? So it shows us who's in control, and we can follow that trend and continuate the move to the upside and stuff like that, right? Now, it also shows us what levels to avoid because they are weak levels and can be deemed liquidity. So when you get these levels that push down in price, goes to take out a demand level and demand low or protected low, and it can't, then price is going to turn around and go aim for that high and take out that high, and vice versa with the lows going to take out a high. If you can't take out that high, then that low will be deemed liquidity. And it allows us to not trade from these levels, expecting price to give us a reaction because we see a move from there, and these kind of things. So it allows us to point out these levels where money enter the market and avoid the levels where false money was entered in the market, and trade from the proper levels. Right. So let's get straight to these charts. You know what I'm saying? I stop the share. Let me get back. I'm sorry, guys. I be playing around. And we got like I'm in New York, man. You hear motorcycles and stuff in the background. Hey, I'm sorry. I'll do my best. You know what I mean? But let's get right into this. So let's just check out the 4 hour. We will go in a 15 minute and a 1 minute and just kind of map out. I'm not gonna go too much in depth, but I want to kind of just show you what you can deem liquidity in the market, weak highs and weak lows, these kind of things, right? So let's just start off here. We get this low, right? This low right here. This low's job is to take out the nearest structural high, which we can just deem this right here. We can say, all right, this is a level right here, right? Price, price eventually took this level out. So this low is now protected. Now price did come and mitigate this level, right? It did come mitigate something in this level, tested this level, got more orders, right? And then it continued that move to the upside, right? And it actually took out that low and actually took some invalid structural liquidity right there. And then we pull back. So as we pull back, now when we pull back, this low obviously is protected, right? And then this is a protected low, mitigated, created the high. This is another one, created the high. So when price Now this high, once it's formed, right? This high's job is to do what? Come take out these lows, right? This is the job of this to come take out these lows. All it does is take out internal lows, right? This low here, comes and take out these internal lows, takes out his own low, these lows being made, right? But in reality, its job is we got this range of demand, like our order flow. Price job is to come take out this order flow. So the real low that I would be like, okay, if it takes this low out right here, let's just map it out to this. It's like, okay, if price was to take this low out, then we'll go bearish, right? But what does price do? It doesn't do its job and take out this low, or this low, or this low. It comes down, respects demand. So again, it's a weak high. Why? Because it didn't take out any important structural points, and it did not take out supply. It did not take out demand, right? So now when we do come here, we can assume that this high will be liquidity, right? Boom. Now we get a strong low, right? Because we get this low right here, right? And what is this low's job to do? To go take out this high. Eventually, it doesn't happen immediately. Come back, get more orders, respect this nice low, and then we go take out this high, right? So when we follow our order flow, as always, we get our range of demand, boom, right? Range of demand right here. Then we can say, oh, this is our next mitigation because this level did what? This level actually came back, respected, right? Made another low. This low's job also is to take out this high. And what did it do? It went up there and took out the high, right? So when we see that happen, we can say when price comes back to this level, it should be respected. And the level that gave us that pullback should be taken out. So we look at it as like, all right, cool. This is our weak high, right? Gives us the pullback. Now, again, this high's job is to do what? Take out this low. What did it do? It couldn't take out this low, couldn't take out this low. Come respect. So who's getting taken out? Right here. So when we do take this entry, minimum, in reality, not always, with a beautiful concept and everything going as planned, we should be aiming for this, right? Now, this is a level here I've seen really strong in the market, right? This nice little wick rejection, sweep of liquidity, push to the downside. You can be like, oh, this is strong reaction. When price come back here, is a nice supply zone, right? But the reason this supply zone is invalid is because it is weak. It is weak because this supply level cannot take out this demand level. All it did was take out this internal range structure, right? Then it realigned with the demand, the higher time frame narrative of bullishness. It respected that. So it becomes liquidity, and you see you get a reaction, take it out, pull back, and then it blows through everything, right? So again, it's the same thing over and over, right? Here is another example. We come here. This high's job is to do what? We didn't take out this high yet. This low's job is to take out this high, right? If price does not have enough orders to go take that high out immediately, it will come back to test levels. It comes back, test this level, is enough orders there. Cool. We go, right? But who else is a weak high now? This is a weak high. And now this becomes a strong low because it did its job of taking out this high and taking out this low. So at minimum, if price tends to come way down here, we should respect this level, right? And I kind of anticipate price doing that in the near future, right? In the upcoming weeks. So just pull back here. People are going to think we're going bearish. We're going to align with the 4-hour and then continue to move to the upside, right? So it's the same thing over and over. Is understanding that price can have a demand, right? We come down into this demand, we create a reaction, price couldn't take out this demand, so now we target this high over here that gave us the pullback, right? Same thing here. On the contrary, we come here, we give a nice pullback into this level, price respected this low, couldn't take it out, so we target this. Now say price took out this low, right, and it broke demand, then we would expect price to come into a nice supply level here or something, and then now this is a weak low because it couldn't take out this high. Even though it took out this internal range, it respected the supply. So then we target that weak low, right? So that's just the different scenarios of how price, and then on the sell side is the same thing. Price comes, buys up into this market, respects supply. We target this weak low right here, right? Price comes back into this level to test it again. It respects it. Then this low is weak, and we can target that again, minimum, and continue our trend to the downside. So this will be a weak point, right? And this will be a weak point. Also, these are weak targets. So if you want to take partials in areas, right? You don't want to wait for the 4 hour low to get taken. You want to take some 1 to 6, 1 to 7, 1 to 10s, whatever. These are how you take these and understand. So let's go to the 15-minute and find a couple more examples of weak highs and weak lows in a tighter range, right? In a tighter space, more intraday action, right? So we get this nice, demand range right here. I'll just take this high to this low, nice demand range, right? Price pushes out of the range, comes back into the range, right? What is this highest job to do? This highest job to do is to what? Take out this low, which is way down here. And it couldn't do that, right? So when we get a reaction, if you catch a nice 1 minute time frame entry, say you get a nice little time frame entry, is really precise, is right below the lows. You target this high minimum, you take a nice 1 to 5 and you get out the market, right? This is the simplicity of everything, right? Look again, we get another high that was formed, right? And then we get another low. This low did its job by taking out this high, so it should be protected. So now when we look for our next entry level, we could just map out this low and say, hey, I want price to come here. Here's our POI. Remember, there's our POI, mitigation, break of supply and demand, and sweep of liquidity, right? We get that mitigation. We set our entry right there. That's 1 to 7. Now these stops are way bigger than that. And now this is a weak high because it didn't do its job of taking out this low, and we target this minimum, right? And we just want to continue up on the trend, right? And continue. And it's the same thing over and over and over again. So now we take this high, right? This is how you build order flow also. You take this high. We know that this high was weak. It got used as liquidity. Boom, we get a pullback. This high didn't do its job of taking out these lows down here. It gets ran. All right, get a pullback. This high didn't do its job of taking out these lows. It gets ran. Now this high right here, right, comes, takes out the low, but it taps into something in here and it ended up getting ran. So now this is when, okay, now what do we see? Is like, all right, why did that happen? Well, we don't really know why it happened, but we just know that we get consolidation right here. So when you see consolidation, you usually don't want to trade in it. A lot of stuff don't get respected. A lot of stuff is weird. Look at this, we get this high created and then this low taken. So what happens with order flow and everything, we assume that this should continue to trend down, right? But it doesn't, right? And that's because this high actually did a job and take out this low. This is strong, but buyers are stronger. They tapped into this nice demand range right here that wasn't fully mitigated to the extreme. Used all these lows as liquidity right here. And, that's the only way we can validate these things, right? But now we go here and we look again. All right, now this high right here gave us a beautiful pullback, something on the higher time frame, right? It came deeper into this range, right? What's this highest job to do? Let's be frank. This highest job is to take out this low, this low, this low. And once to take out that first and second low, I'm assuming that we will go bearish, but it couldn't do that. All it did was create some internal bearish structure, and then it respected this demand overall, and it got ran as liquidity, and it continued to move up. This high did the same thing. Push down, still respected some type of demand range, which is right here. Get this high to this low right here. Demand range. We're still holding that demand range, right? And now this high hasn't gotten ran though. This high seems a little strong because we couldn't take out the low. We respected demand, but now we couldn't take out the high. So now you're in this range, right? And now you get a respect from this level. You get a big push, but then you get a big push back up. So now you just get the hell out the market and you chill out because we don't know who's in control now, right? We got demand holding and we have a large supply holding also, right? And we don't really know who's in control. Actually, this supply got tagged, but let's just say this is the whole supply right here, the supply range. So now we sit between a big range, this high and this low. And right now, in my opinion, neither is strong, neither is weak. Both are just kind of trying to figure it out. Banks are stacking orders. We can expect a big move to the downside, or we can expect one to the upside. Who knows, right? But this is how weak highs and weak lows work. Now let's go to the 1 minute and map out a few examples again. All right. So now we come get out of this consolidation, this most recent range. It is not proper. So I don't want to give you guys examples of invalid structure and stuff, but the market is very goofy. It's a lot of consolidation on GU, just being honest. So let's just look at some random action, right? So again, you get a 1 minute pullback, Price job is to go take out this high is the job to take out the lows. Couldn't take out the lows, it respected demand. It gets ran, right? This high pulls back, couldn't take out the lows, it gets ran. This high's job, right, was to go take out lows. Now we see this low get taken eventually, right? That low got taken, and what happened? We start going bearish, right? Now on the we get a big push to the downside, right? And this is how we look at price. Now the 1 minute lows were taken, so now we go realign with the 15 minute, right? So we backtrack to these levels right here, right? We got to understand what's liquidity and what's not, right? So these 1 minute lows get taken. So now we can assume that this high's job is to go take something out on the 15 minute. And if it doesn't, it is going to get ran and used as liquidity. So we go to the 15 minute and see with that high, where is it? This is the high, right? Again, the highest job is to take out what? This demand level, these lows down here, these strong lows. It did take out this low. So now it's a strong high, right? But once it realigns with the higher time frame is in this demand zone, now its ultimate job is to take out this level. Once it take out this demand, we can expect a landslide. But the moment it can't, then we will say, hey, this will become liquidity, right? And now when it took out this level here, now we can just continue to trade it to the downside, right? Until we get to this demand. Because we know that supply is in control once we take out this low, once we take out these lows, right? That 1 minute low went, now we can assume that this high should be taking out this low if it's strong. In the event that it couldn't, right, and it stopped here and we sold our profits, then we catch buys and we go take it out, right? But we come here, we take ourselves, we hold them, take most of our money. We see the continuation. We get here and we like, shoot, I'm about to buy the market up to come take out this high, because that's the highest job is to go take out. The highest job is to go take out the lows down here, and it couldn't do that. So we're gonna assume that we get the big push and we take it out with CPI news, right? So this is how weak highs and weak lows form. And I just want you to go on your chart and just say, hey, like this is a weak high, this is a weak low. When you see supply being respected, right? You get a weak high right here, right? This job, take out this low. It takes out the low. Price comes back into that level. We can trade from that level, right? Reason we can trade from that level is because strong level. We showed intention from that level. So we can say, all right, cool. Entry 50%, right here. Target the next low that couldn't take out this high because this is a weak low. And you see how quick that gets smacked. And then you just continue that over and over and over again to the bottom. Same thing like this right here is a strong high because this high took out this low, right? Price actually came back into this high, created some order flow, right? Then you drag this over. You got this low that actually took out the demand. When price comes back there, we look for a sell-off. Price comes back there. Realistically, this is the level that brought us back to this level. So if we was to take this entry right here, we just target these lows here. And as you can see, it eventually gets smacked beautifully, right? So this is the power of understanding weak highs and weak lows. This is a strong high. Then this is the part of the chain. We don't get a mitigation here. We push away. This low's job was to come take out this high. It couldn't. It gave us our third mitigation of the supply chain. And then we just catch the entries and hold it to the bottom of this weak low. And then you see once price got from there, it just kind of pushed away after that. And, you get a big, big move. So this is weak highs, weak lows, strong lows, man. I just wanted to really break this down for you guys because it helps a lot in understanding when you get in the market, when to get out. It helps with targets. It helps with a lot of these different things and just understanding what not to enter off. Weak levels we don't want to enter off. We got to understand, like, if you see this big supply move right here and you say, oh, well, this, this right here was a beautiful level, gives a big push. And it's like, well, it is supply, but what didn't it do? It didn't take out low. So when price come there, you see we get some nice reactions. So you probably got some profits, but you were aiming, for the bottom, right? So you like, I want this, right? And price eventually takes you out because, you in profit for a little bit, you're like, yeah, we targeting the lows right here, right? And then price eventually gives you some money and takes you out because you're not understanding that this is a weak level because it did not take out this demand, right? And it happens over and over and over. Same thing here. You say, oh, I'm about to enter off this, and price comes back. I want to enter off this, as I mentioned, like this level here, this nice wick rejection. Price comes up into that. You say, oh, I'm about to take the sells. I'm aiming for the bottom. You get a nice reaction, tap into another demand and it continues to trend up, right? So this is how we filter out using weak high and weak lows. We want to understand what not to trade off and what to trade off, and how to validate point of interest, how to validate supply and demand, how to validate these levels, these weak high, protect the lows, protect the highs, all these things, and continue our move. So, man, I hope this brought you guys a ton of value, man. Please let me know in the comments if I'm missing anything, if you want to know more, how I can help you out. Again, make sure you like and subscribe as usual. I appreciate y'all. Show some love. If you're new to the channel, man, welcome to the SMG fam. Again, I'm gonna drop the clothing brand link in the bottom. I would really appreciate it if you guys show some love to that. Because man, those hoodies are fire. Got a couple flags. Like I said, I will be dropping a mouse pad soon that will be saying like trade your setup. And also say like trade your edge, stay patient or get swept, those kind of things. Just as a reminder as you trade, you have it on your mouse pad to see. So these little things, I'm trying to incorporate into the trading. But I really appreciate the love, the support, man. Love y'all. Smart money, go. Let's get it.